also take stock of how the US markets wrapped up. You had most of the indices on the back foot. You have the Asian markets as well looking a bit mixed, and the SGX Nifty indicating a muted start. Of course, what the street will closely be eyeing is what is going to happen in terms of the key policy decision from the US Fed. Gary Schlossberg is a global strategist for Wells Fargo Investment Institute, and he now joins in to give us some perspective on the same. Gary, good to have you on board. Many thanks for joining in. While it seems that it's widely expected that the US Fed is going to raise interest rates by about 3/4 of a point, do you think that the street is watching out more for a signal as to what the central bank is going to do in terms of slowing the pace of the rate hiking plan come December?
I think that will be the attention of the market on the meeting. 75 basis points is a pretty foregone conclusion for the rate increase tomorrow. What the market's looking for is some sort of indication that the Fed will begin to throttle back. The Fed will be walking a fine line, we think, between giving them that indication and doing so prematurely. We still have a CPI number out that could be unfriendly to the market. So it's going to be a balancing act.
Gary, what if Fed indicates that 75 and no more? Could that really reignite the market momentum? Do you think markets could, in a sense, see a bout of short covering, a big comeback by the bulls if the Fed indicates that 75 and no more?
Well, if the Fed indicates nothing more than 75 basis points tomorrow, that will match market expectations. I think the reaction really will center on what the Fed plans to do out beyond that. We certainly don't expect the Fed to stop rate increases with this meeting. I think that's still pretty much off the table, given the health of the economy so far, the fact that it continues to move forward, and the fact that inflation at over 8% is well above the Fed's target. Really, the market will react, I think, to the tone of Chairman Powell's press conference. Some sort of indication that the Fed will be tapering a little bit the increase, the size of the increase at the December meeting. And if the Fed chairman doesn't strike that balance appropriately, I think the market will show its disappointment.
And what kind of an exuberance can be expected if the Fed does signal that it is going to slow down the rate hikes going forward? You know, the report rally as much as 10% if that were to happen.
Difficult to say just how much the market will rally. I can say that our feeling is that at this point it would still be fairly short-lived. The market has or will benefit to some extent from the prospect of a peaking in rates, better visibility on that peak in rates, which many of us feel is close at hand in any event. But the other shoe that may drop is the earnings outlook. And that's very much dependent on the economy, which hasn't even entered a recession yet. And we still think we'll enter a recession during the first half of next year. So there are still going to be some difficult months ahead as the market focuses more on the earnings outlook. And third quarter earnings, I would say on balance so far, have been a little disappointing, and we can expect to see more of that in the fourth quarter.
I think it was actually Biden's commentary yesterday almost prepping the market in terms of what to expect. And, you know, to be honest, that caught me by surprise.
Well, we're a week away from elections here, and the president is doing what he has to rally the troops to try to generate support for the Democrats. He's done that with oil policy. He's done that with the spin he's taken on the economy. That's to be expected. But the political side of things, I think, will be fairly short-lived. As we get by the election, the market will be refocusing again on earnings and the interest rate outlook. And as I said, I think it's going to be difficult for the Fed at this point to be that transparent about throttling back on the rate of rate increases, the size of those increases. The Fed's really going to have to be still somewhat circumspect, still balanced in its comments on the rate outlook, suggesting that it's still going to be data dependent, would be my guess at this point. And that could leave us open to some disappointment in the market. I don't want to anticipate it, but I just don't see the Fed being that transparent at this point.
Right, guy, I really appreciate your time. Thank you for joining us. I want to go back to that point once again.